Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Friday, February 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up 2 3/4 at 467.5. March soybeans up 6 1/4 at 1029, and March Chicago wheat was up 3 3/4 at 550.5. This morning, we had an export sales announcement, 20,000 metric tons of soybean oil to unknown destinations for 24-25. Also, we had a core inflation, one of the Fed's key core inflation numbers out this morning. The personal consumption expenditures index was up 0.3%, which was a new rate of 2.6% in January. All those numbers were in line with expectations. They actually bought stocks a little bit on that number here. So the Dow currently up almost 200 here this morning after yesterday's break. We are through 18 of 19 settlements for our spring crop insurance discovery period. So we're going to wrap that up here this afternoon. Corn is currently sitting at 471 and soybeans are 1056. So we look like we're going to certainly be locking that in and go into the next couple weeks where we're making our key crop insurance decisions and getting everything booked up. So with that, we'll talk a little bit here this morning. Yesterday, guys, it felt like we were kind of tied to news, whether or not the tariffs were going to be enacted. Looks like that March 4th time frame is going to happen for Canada and Mexico, and then an additional 10% for China. So with that, Justin, maybe a few thoughts here to wrap up the week, and we'll throw around the room.
Yeah, I think I think a lot of stuff is getting thrown at this market at the same time. What we talked about yesterday a little bit, but March expiration, options expiration last week. That's a really popular one, probably second behind the December and November options for corn and beans. March is that, bridges that gap from fall to crop insurance, right? So a lot of people buy puts as hedges against crop insurance, all those kind of things. We had huge open interest. We'll see what Commitment Trader says today, but a lot of options expired. So then we had a big move afterwards. Now we're going into first notice day. Got a big fund position, probably a decent size open basis contract position by the grower. So we're seeing a lot of, pricing contracts that you have to do by, last couple of days, today being the last day for sure. And then that's, we talk about a lot on the show too in our letter that, these are, it's not uncommon, having a hard break going into first notice day. And then you tackle on tariffs going in place next week. Obviously a big sell-off in the stock market, some uncertainty, kind of a risk-off attitude. So I think you threw a lot at this market in a short amount of time. We'll see how it acts next week. So if you were wildly bullish, the kind of the older adage is you buy half on first notice day and half the next morning after deliveries come out. So see if that holds true or not. But I think it makes sense. It's obviously not fun when it happens, but I think it makes sense. It's getting into areas that we should have had a correction at some point. So
very good, Ben. Give some final thoughts here for the week.
Yeah, I think we threw a lot at the corn market. We were going to throw a lot at it with first notice day rolling in to begin with. Then you throw in the Ag Outlook Forum, some risk off, and some other markets. We still are, we're on our continuous chart. We're holding the line. 85 in May is the 50-day moving average. We're slightly below that. Justin and I were talking before the meeting this morning, and I think you find out a little bit more about corn over the next couple of days. Is this a risk-off environment where managed money wants to truly exit wholeheartedly, or is this the necessary break that we needed to have, right? Every grower's familiar with the calls that happened this week, which is price or roll. And I think the one certainty that you can take out of this after the week is the grower the grower has less corn to sell after this week, and maybe by, every week there's less, but this is a week where it gets hit particularly hard as the rubber meets the road, and they've got to make the choice to roll for 15 cents to the May and take their chances on higher prices, or to price and to be done with it. So I'm glad that we have this hopefully behind us, today, maybe a little bit into early. And I think corn will reveal a little bit more about itself. When you look at the outlook numbers, they look slightly negative on paper in corn, but it is February 28th. So just, bear in mind that we have a long way to go here, and we're still running, fairly snug on old crop corn stock. So soybeans, ag outlook number for soybeans, you stick with those acres and pull a bushel or two off of those, and it gets really interesting domestically quick. So,
yeah, I think just to add to that, I think what's interesting about crop insurance prices being set higher than we are now is if the market were to continue to liquidate, you have until March 15th. So if we were to continue a sharp decline from here, you can basically buy up crop insurance. You can buy up your in the money puts basically. So I think it runs out of steam, or we see massive increases in crop insurance purchases, or upticks on coverage levels, right? Because you can buy up that price still. So I think we've seen that a couple times, and I think last year might have been one of them also, where you had a big break in that 2-week window when crop insurance was set and when you could still buy that crop insurance. So another thing to keep in mind, if you let's say D's corn, got into the 440s or something like that. I mean, you could buy insurance where you're already, you have 100% protection from current prices. So I think that drives away any incentive to sell a bushel at all. So that'd be my take, is that especially new crop corn holds, somewhere between here and 10 cents lower for this time frame until we, get it planted and stuff like that.
Is that enough to drive that more so that narrative, the 95 million acres, Justin? If you,
it's it could be, the end of the day, and this is what we've talked about for months on the show, is yes, the ratio is lower than it's been for a while, but costs are extremely higher. Mm-hmm. So, I think that's going to be the really interesting thing, is like, yes, if you're cash flush and you have really good working capital, maybe you don't go a lot of corn on corn because you can buy up your insurance and do these things. A lot of people aren't in that position. And a lot of people, especially in the I states, like their rotations. So you're talking about, in my opinion, a much smaller amount of, call them swing acres in those states. Maybe guys plant 10% more corn, on an individual farm or something like that. But to go 100% corn on corn, there's not a ton of people that can do that in this environment. And if you have a sharp break from here, like, yes, you'll feel better that you're getting insurance and your downside's kind of covered, but you're still losing money.
Yeah, it's still red.
So that's what's going to be so interesting about, I think, people that are expecting 96, 97, 98, some giant corn number, I think are going to be pretty disappointed. If it does happen, then beans are going to be extremely tight, if we lose another 3 million bean acres from that outlook number. So they're both kind of, an outlook, I think, comes out and tries to kind of balance the two. And they both look like, just kind of normal stocks, nothing burdensome. And that's with record yields. So I don't know. I just think if you look at where all the different government support programs kick in, what you can buy now with insurance, you can get downside protection that's not very far from these levels. So I don't think you shouldn't see a ton of farmers selling this early for new crop. I don't think, if you get below these levels.
Sure, that makes sense. I was going to ask you too, Justin. I got a question posed to me yesterday on the certainly on the cotton side. So that's been a really depressed market. We've talked about it a number of times, but really, I mean, and listen, we know the outlook is the outlook, but to only see it to 9.9 from 11, down 1.1, is that something that you could see maybe a bigger switch down there, or what's the thought there?
Yeah, I mean, certainly, everyone's been forecasting lower acres. If you look at the market, you would say that's certainly going to be the case. It's an expensive crop as well to grow.
Yeah.
So it'd be curious to see what those acres go to.
Yeah.
I think a lot of that's where you're getting, the total corn and bean acre pie in Outlook was a large number as well. So they're expecting that to come from a lot of the minor crops, which, I think that's where you get it. But then that also makes the argument that, well, are you going to really get a record yield? You get all these acres in these kind of fringe areas, and also put in a record national yield. So that's where a lot of this debate's going to be happening over the spring. I know that's what the government's job is. They have their trend. We haven't hit it in a long time, or beat it in quite a while. The bean yield, I think it's been 9 years since we've had a record. And I remember that year very well. We, especially in the I states, it's a massive switch in corn on corn acres to a 50-50 rotation. And personally, like on our farm, we were planting bean fields that hadn't been beans in 30 years, right? So you're getting 100 bushel beans, no disease pressure, right? So we had that massive uptick in yields over those couple of years there where that switch was going on. And since then, it's been tough to get a national yield over those numbers. So we're writing down a 52.5. To Ben's point earlier, that still gives you a 320 yield. A lot obviously you can see what demand has to do. Domestically, crush capacity has been great. We're doing another 25 million bushels every single month. That keeps adding up. So
why would you plant more wheat? That's a question too. Like seeing the wheat numbers go up, like why would you think that would take place, or would you?
If you were putting some more wheat in, like soft red wheat to double crop with beans, as a rotation or something like that, but that's usually you're talking about 1 million acres here and there. Yeah, a lot of guys won't plant wheat just because they don't want to work in the summer. So it's not you're a wheat farmer if you plant more wheat, but yeah, I don't know. The wheat market's probably been the most disappointing on this break, right. For something that's kind of been the short leg, and it's not really, there's not a wheat story right now, except for the funds are short in my opinion, and we're waiting for demand to come our way. I think that's being depressed right now by Ben and I were talking about this before the show as well, that obviously Russia, Ukraine, some kind of a deal, right, would open up, maybe some more production there again, and that's obviously been even with the conflict, Russia's been undercutting the market with wheat, for the majority of that time. So,
okay, well that's
I don't know what that's worth, but that's. Yeah.
Well, no, we're just, it's going to be great for the next 4 weeks, where I feel like we'll probably rehash this conversation in a number of different ways,
Well, I will say, I was talking to Bennett, and just the attitudes right now, I think we've already gone through, it's only February 28th. And I think we've already gone through, 3 sets of emotions, marketing wise with growers, where, cheap prices that fall, we're never going to rally again, and kind of selling in the first rally, and then getting frustrated they sold too much, and then rallying to, basically 13-month highs and getting bullish, and then now breaking again and feeling like they need to sell it. So we're kind of back in that range that I think that we were in between 2015 and 19, where we traded both sides of break even, and it was really, really stressful, right? The market could never run away to be a bull market, and it just would chop people up. So I think we could see a lot of that, people selling breaks and buying rallies. I think you have to be really disciplined on where all those things kick in with crop insurance and all those things, and not get too emotional. You got to be really strategic, because look how fast it's moving, and we're not even into the crazy times yet.
No.
So.
Oh, very good. Let's get a couple minutes here. Ryland, feeders led the way yesterday, which was good to see. And hogs are just really tied to this March 4th tariff news, and real bad performance in the April yesterday. So why don't you put a bow on the week for us?
Yeah, no, we saw a little bit of cash trade yesterday, 198 in the north, 313. So, still too lower from last week, but not as bad, I think, as the market thought they could have seen. Open interest was actually up almost 1,900 contracts on the live side. So I wouldn't be surprised that we're trying to see maybe a little bit of support from the feeders, and maybe a little bit more kind of new buying going into the weekend, but you just haven't put anything really good fundamentally out there. Choice was lower again, down 172, select 111. So maybe there's a little bit of hope here, but price action in the cattle just didn't look that good when you compare it to feeders, which are knocking on the door contract highs. So I think everybody's just going to be watching the feeders, and hopefully that takes the live side back up, because there's a lot of concern going into the back end of the market about profitability. We need some of those premiums back, I think, to give a lot more higher degree of confidence and security and profitability. So that's something to watch. And then on the hog side, trading limit down. Obviously the market reacted pretty strongly to the tariffs not getting pushed out to April, still happening in March. So overall, it seemed like the industry really tried as hard as they could to get that belly quote up. It was up $27, so volume was pretty light. So we'll see if the market calls any BS on that one or not. But I mean, probably good for a little bit of support here. But there was virtually no change in hog open interest. I mean, you were only up 12 overall on a limit move, which just seems insane to me. So maybe there just wasn't a lot of teeth to the break. Overall, I think we're watching the tariffs to see what kind of real impact they have. And obviously, if they don't go on or some kind of deal gets worked out, maybe the market finds a little bit more confidence here.
Very good. Appreciate the update. We have a very special Fun Fact Friday here today. Our senior friend, B. Wills, it's his birthday today. So if you call in today, you got to wish our guy a happy birthday. But it's everybody's favorite part of the week, Brian. Fun Fact Friday. What do you got for us?
Thanks, Dan. It was a cold morning on that Wednesday back in 1973. Sun trying to peek out, wind blowing in from the north as I entered into this world. So I was going to do a little Friday fun facts about myself. So in first grade, I'm just kidding. No one would want to hear all that. We'd probably lose a lot of viewers. But as I do enter into my second year of my 50s, I'll let all you young guys in on some fun facts about being in your 50s. Ben, you'll be able to concur. Going to parties, you'll definitely stumble across people's talking about their ailments, and everybody has a remedy, mostly about their knees or their back and so on and forth. But the good thing is when you're at a party, you'll actually know from across the room which is the best chair that you can sit in for your back. It's just a second nature now. You think you're still young, and you're still like a Danish machine, but as you see yourself in a mirror doing those moves, you're probably like, nah, I'll probably not do so much anymore there. That looks kind of embarrassing. But you can't remember anyone's names, but you sure can remember your favorite lines from your 80s movies. That never leaves you there. An ideal weekend night is binge watching Netflix series and being in bed and hitting that pillow by 9 p.m. If you can get a nap in on a Saturday afternoon, it's better than sliced bread. I'll tell you that. But you do begin to get a superpower. You have selective hearing. I could completely zone out my wife, but I can hear a whisper from across the room. And lastly,
it trickles in your 40s.
Yeah, I hear
starting.
but I'll leave you with an actual fun fact about me. I may or may not be allowed back in New Orleans from a bachelor party back in 2002. So thanks for the birthday wishes. Have a great weekend, guys.
Happy birthday, Brian.
Thanks.
Happy birthday, buddy. Very good. We just came into the open here. We got March corn up a half, 465 and a quarter is the last. March soybeans are up 6 at 1028 and 3/4. And March Chicago wheat is up 5 3/4 at 552 and a half. We got some more info in the outro, but we are, as we've talked about every day, running a special deal here through April 1st for new clients. Now that we're going to have our crop insurance price set in stone, if you'd like to go through, do a deep dive, make sure you're getting yourself positioned properly for the upcoming season and how that all fits together with marketing, I would love to visit with you. So please give us a call. And again, to everybody that supports the show, if you wouldn't mind, throw us a like and certainly subscribe. That'll keep you up to speed on everything that's going on with AgYield. It doesn't cost you anything to do so. And again, thanks to everybody that supports the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend, and we look forward to talking to you guys again next week.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.